Yeah, I mean, the anticipation turned out to be worse than the actual event. And now the messaging that we heard yesterday, honestly, I think it sets us up to be prepared for the worst, but hope for the best and hope for some sort of dovish tilt if we get a surprise that inflation, in fact, starts to relax, or that they can't hike rates as quickly as we think today. And also, we've talked about this on the show many times. If tech rallies, the overall market does better. So as tech sort of recovers here and sees some nice rallies, you're going to see the overall market go up as well. And there are a couple different outcomes that could happen. Well, there are a lot of different outcomes that could happen. I don't think any of us pretend to know exactly what's going to happen. But a couple things that could happen. If we end up orchestrating the soft landing, which I think is probably a low probability, then tech probably does well there if inflation cools off. If we have a hard landing and people get nervous because there's an inversion or an impending recession, tech still does well. So I think some of this rally in tech is something that could hold up for a little while.
Josh, rates up, tech up. I mean, it's been a nice run. You've had some hawkish comments in the last 24 hours from the Fed chair himself, from others. You've got the market now pricing in, according to Leisman, 7 more hikes this year from 6. And 50 basis points at least one meeting, and yet here we are. What do you make of it?
I think we get a curve inversion by the summer or early fall. I think then you're on recession countdown. Earnings should hold up throughout the balance of this year. Companies have done a remarkable job passing through all of their higher costs on everything from commodities to labor to the end customer. But that obviously can't continue as we remove liquidity from the system and all of these stimulus plans start to lap their 1-year and even 2-year anniversaries. So you've got a consumer that's in good shape. A year ago, I would have said incredible shape. Balance sheets are still decent, but they can't withstand what it costs to fill up a gas tank. They just can't. And then when we get into air conditioning season, it'll be worse. And now Europe seems to be moving toward some sort of full continental boycott of Russian oil. And that's going to make everything worse as well. Speaking of Russia, they are now forcibly removing women and children from the city of Mariupol, which looks like a Mad Max movie. They're packing them on trains. We used to tease Ray Dalio for calling this a late 1930s analog. I don't think you could do that anymore. That's literally what the pictures look like if you watch the news 7 nights a week.
So you're bearish.
In that kind of environment, it doesn't take much. In that kind of, well, look, the U.S. economy, the U.S. stock market is the best of the bunch. Okay, but in that kind of environment, just remember the market can turn on a dime. It's great that the Nasdaq has rallied off the low. It's great that Facebook and blah blah blah. It's great. I'm not against it. We own these stocks. Okay, but this idea that we're going to flick a switch and be risk on, risk off, risk on, it's really, really hard to do. So I just think if you're going to be in this market, tighten up your stops if you're in a trade. Moderna is a great example. Weiss brought it up, so I'll reference that. I bought that stock by accident. It's my best trade of the year. Tells you how good I am. 125, actually. So now I'm rolling up the stop into the high 150s. I'm going to trail it from there. I'll probably end up using the rising 50-day at a certain point and just try to hold on to Moderna because I still think it's gotten too beaten up. You can do stuff like that, but I don't want full risk to have that entire gain, 45-some-odd% off the low, turn into 15% off the low, and I give up all this opportunity. So I think you can be productive. I know what Pete's doing with options. That's very short-term stuff, too. I think you can do that. I just want people to keep in mind the context is pitch black. Yield curve inversions and worsening geopolitical crises historically don't resolve themselves like a sitcom in 22 minutes.